All right, we have still a couple of minutes for the opening rates to kick in. Won't be very celebratory. We don't even have the SGX Nifty to guide us. So we will ignore those pre-opening rates for the moment and discuss something which is going to be very important to F&O traders and investors in the days to come. Yesterday, Sebi, yesterday, 31st of December, at 8 p.m. we get this news that Sebi wants physical settlement of derivatives. It'll come in three buckets. The top 50 counters with by way of market cap will be settled physically in April. The next lot come in end of June and the last lot come in October. But basically all derivative contracts will have to be cash settled. What will this will have to be physically settled and not cash settled. We're joined by Yogesh Radke of Edelweiss Securities and in a bit Deena Mehta of Asit C. Mehta. Yogesh and Deena, a very happy new year to both of you. Well, first up, Yogesh, how are you receiving this news as a trader? Do you think it's going to, seriously change the grammar of trading?
Yeah, morning, Lata, and Happy New Year to all the CNBC viewers and the CNBC team there. As we have heard that NSE and Exchange and the Sebi also says that they want to work harder, and that's the reason they gave the circular at the just eve of the new year, 31st December. Now, the circular says that there's an extension to the previous circular which talks about all the stocks to move to physical settlement. It would be done in a phased manner. Right now, only 5% of the open interest stocks are into the physical settlement. But I would like to say that market has got a lot of time to get acquainted with the system, and they are already now knowing the system of the physical settlement. Sure. So in a phased manner, it was expected to be done. It would be done. Would it impact the volumes and all? I believe that it should not impact. Gradually, you'll find that lesser volatility would be on the expiry day, given that it would be all the physical settled stock.
Sure. Good morning and Happy New Year. In fact, just a bit of a clarification, the bottom 50 stocks would be the first to be settled. After that, the next, and then the top stocks, of course, would be the last. 5%, as Yogesh rightly mentioned, is already part of that. Yogesh, the issue is, the feedback I get is that a lot of, brokers don't nowadays allow trading in the last week or expiry on the futures which are in physical settlement, and they don't allow options trade as well, from Monday to Thursday on expiry day. So do you think that part of volume will get reduced a lot because, you'll have to trade perhaps in the next month futures and not in the current month futures?
Right, Anuj, this was the case on the first expiry when the physical settlement came in for those the 5% of the stock. Most of the brokers have now got equipped their systems. It was all related to the systems upgradation. I think most of them have been upgraded for the physical settlement. And up and above, I will say that the market has to get adjusted, or the systems have to get upgraded if you want to be in the market, derivative trading as a broker, if you want to be there. And most of the brokers will be equipped with all the systems. So I don't buy the argument that the volumes will get impacted by the physical settlement coming in. Maybe some amount of speculation will be reduced on the expiry last half an hour VWAP rates which are there.
Yeah. Just a bit of a systemic risk, Yogesh. Won't there be a case where if someone's holding an option and it becomes a bit illiquid, in that case there's going to be a bit of an issue, right? So perhaps people may not want to take that risk, even though the system might be ready right now.
Yeah, obviously the regulations have been put forward quite well. It's an offsetting position. It's not only that you have only a long call or a long put option open and you go for the physical settlement. If you have an offsetting position against it, which you can obviously create by the future, because it's not only option to option, it's option to future, future to option anyway. It has to be a netting of the position. If you have a net off position, you may not have any obligation left out on the expiry date.
Deena Mehta also is with us. Deena, hi. Happy New Year to you. Do you think volumes... thanks a lot. Do you think volumes would get impacted, or would it be a good thing because, it would put an end to that last hour speculation that we generally see on expiry day?
Yeah, let me, first say that very happy New Year to you all and to the viewers as well. I think this is a fantastic gift that Sebi has given on the first day of the new year because I was part of a derivatives committee of the Sebi and in which I had put a dissent note because everybody was for no physical settlements, but I had put a dissent note saying that physical settlements are a must. Because what happens is that at the end of the month, the transactions which are short or long, they are just removed from the exchange floor. But if you have a compulsory physical settlement, that people will actually come and square off their position rather than just sit put waiting for the differences in money to be settled. So I feel it's a great thing. In fact, it will aid the volumes. And bigger thing is that, this disconnect which is there between the cash and the derivatives market, I think that disconnect to some extent will get corrected because people would, have to go and square off their positions or arrange for deliveries from the cash market. So I feel that, that would be, structurally, I think it's a very big move because structurally, trades cannot just go off the market. They have to get settled logically either by square off or by a physical delivery. So I feel that, like you require DMAT for the market, you require trade guarantee fund for the market. That way, this is also a very, very strong structural, systemic thing which is required for the market, which I am very happy. Though, several half-hearted attempts have been made by Sebi being not mandatory. But I hope now Sebi sticks to this and we go ahead with it because personally I think in the long run it is the right thing to do and really lead the market.
Okay. You think, good morning Dina and Happy New Year from me as well. Do you think the exchanges are geared to implement this by April? And will they need something else in terms of, availability of shares, the ABL window or something like that?
No. See, already SLBM window is functional. There are people who are active in that window. And, market tends to correct itself. People who are having stocks, they'll move, they'll give the stocks. So I don't see much of a problem so far as the supply side of securities are concerned. And, maybe if there is less supply, then the excesses which are there, and the kind of speculation and price manipulation which happens in the last week, especially for the illiquid stocks and the rates at which the transactions are settled in the options market, I think those kind of manipulations would be curtailed to some extent. That is what I feel. So I am not, and exchange systems are very much in place because they have tried it several times. Only broker systems, it is involving lot of changes in the systems which the brokers, vendors have been doing it, and it is a big activity.
No, Dina, will volumes be impacted to the extent? I mean, since, you don't have people who are just coming in for the casino effect, but who are coming with, the adequate capacity to buy and deliver. Do you think the volume therefore declines?
No.
And therefore some illiquid shares don't trade at all? No?
No, I'll tell you why it will improve the volumes. Because people who have short sold or long bought and they actually do not have, and which majority people do not have intention to take deliveries.
Yeah.
Those are the guys who are going to come and square off their positions before the closure of the month. Okay. And I think it could aid the volumes rather than bring down volumes.
Yeah,
that is what I feel.
And you know what, I tell you something, even if it brings down the volume, I think this is one move which we all should hail.
Absolutely.
Exactly.
It was a long pending move. The Indian derivative market, especially in stocks, had become a bit of a casino, especially on Wednesday and Thursday. A lot of stocks getting into ban. I mean, of course, over the last 6 months, what you've seen is, because of the market volatility, the stocks going into ban has also, come off a bit. But, what was happening was, structured deals on out-of-money options being done at 5 paise, 10 paise, just to get the stocks in the F&O ban. I think all of that was clearly...
All that nonsense stops.
All the nonsense perhaps stops a bit. Okay. Prakash, your thoughts on this?
Many congratulations to Dina for spearheading this. So good that this reform comes in. Prakash, you were going to say?
Yeah, so I do, anecdotally recall when Dina had mooted this years back. This was about 3.5 years back when this whole drive started. And where it helps for a market player is the long-only funds will start finally realizing value out of the SLBM window, which to date is not a compulsion for the other guy to come and pay money to borrow. Secondly, last year, if you recall, the FPIs were banned from naked shorts in the system. Right. So that was the start of what was a corrective mode of sorts. This will make sure that even if you have an MRF and you want to book profits, do a covered call, you can do it with a Page Industry MR. Otherwise, today, if you short that, the counterparty actually knows that you don't have it and you're shorting, and that opens you up for a lot of volatility and speculative moves. Yeah. So I think the market will become much more healthier. You'll not lose your shirt. The only thing the brokers I've been noticing, the brokers send out these notices every last week of the expiry saying, these are physical settlement stocks that you have on your F&O side. Please square them off timely. So that the surveillance will have to be slightly stringent. But I think that's a systemic plug-in which they could do. But I think it's a wonderful way to make your equilibrium in the market much more healthier.
Right. Well, we must, of course, discuss this in much greater detail. Yes, but we are heading into the market opening. Dina Mehta and Yogesh Radke, thank you very much for joining us and for enlightening us that this is a huge reform that Sebi has ushered in for 2019.
Oh, yes, it clearly is. The pre-open rates have settled 19 points higher on the Nifty, 71 points higher on the Nifty Bank, and the mid-cap index also up about 34 points. Let's take the 9-10 calls before we go to Manisha very quickly. Ashwini, your 9-10 call?
It's still range bound. I don't think these 20-30 point moves will matter. But 9-10, I would go with Kotak. Now whatever has happened is probably out, and shorts are likely to cover, maybe fresh buying, etc. So that's a buy with a stop of 1240, target of 1285.
Okay, Sudarshan, what about you? At 9:10 this morning, what would your top call be?
Well, I'm already in the banks, so I'm going with Sun Pharma, where I think Pharma is getting some momentum. Buy with a stop at 422 and a target of 440.
Okay, and Mitesh?
I would choose a long one, JSW Steel, buy with a stop at 301 for targets of 318.
Okay. I'm just a little worried that the yield is at the moment showing 7.38. One thought that it would start receding, but clearly the market is in the grip of a fear that something big could be announced in terms of a farm package. Yeah. And therefore the bond yields are refusing to climb down from 7.3. Remember, so many people were telling us 7.2, and the yields are headed lower. All that has gotten wiped out after this fear that a huge farm package of some kind will come.
A basic income package also, right?
That's one. Either it's a basic income package or is a price rationalization package. That is the difference between the market price and the MSP, the promised price, will be put into your Jan Dhan account. Or worse still would be a national loan waiver, which some people are pegging at about 3 lakh crore or more. If the basic income is pegged at 1 lakh crore, none of these are easy to implement because the basic income will depend on your land records. Now, Telangana is the only state with proper land records. So it's not easy to implement, but nevertheless, there is this fear of a package and fiscal excesses. And that's why, the bond yields are refusing to come down. To add, you also saw crude prices going up yesterday. So they went north of 54. So there could be a little bit of pressure on that. But on that, the expert is with us.
Yes, and you know what? If you were a crude bull, then 2018 would have been a really bad year for you because crude ended down 25% in 2018. The first annual loss that we saw since 2015. Manisha Gupta is here to give us a roundup of all the action from this commodity markets overnight. Hi, Manisha. Happy New Year to you. And what are the commodity gods telling us?
Happy New Year to you as well, Sonia. Thank you so much for that. Well, in the last 24 hours, the volumes have been really low. If you look at the major markets in Asia, Europe, US, Canada, all of them really are shut. So the volumes have been much on the weaker side, but the prices, as you said, have seen a bit of a surge come in. So we closed the last day nearly a percentage point on the higher side, and that's exactly how Asia is showing. So 40% off from its October highs. The last quarter has seen nearly nearly 35% of decline. And as you pointed out, we are more than 20 to 25% down for 2018, the first annual loss since 2015. Just to give you a sense on prices, right now we are trading around 54 for Brent. But when you look at 2018, the Brent average price has been at around $71. Same is the case for NYMEX as well. We are holding around those 48 kind of levels right now. But when you look at the average price for 2018, it is at around $65 per barrel. So it has seen a lot of volatility in the crude oil prices in 2018, so as per to say. But as we move ahead, the uncertainties have come along in 2019 as well, whether it has been about the global demand concerns, oversupply, or the trade dispute between US and China, etc.
All right, that was a photo finish, Manisha. Thank you very much. Important point. Low volume in crude. Even the sheikhs are celebrating New Year. And here we are working. Okay, it's a very tepid start. It's about 0.2%. In fact, 0.17. 19 points higher on the Nifty and about 120 points higher, 115 higher on the Sensex. That makes it a 0.3% gain for the Sensex. The mid-caps are in line with the Nifty, 0.1. Bank Nifty 0.1. So it's just looking like token trades and no one's heart in it, or perhaps no one's head in it. More than anything. Positive number, the green stocks are Bharti Airtel and Bharti Infratel. Both are up 0.7 and 1.2%. Z Entertainment is also up 0.7. Bajaj Auto, TCS, Axis Bank, Cipla, JSW Steel, Tata Steel are all up. Well, about just struggling to be 0.5% higher. That's all. The rest are not worth reading because it's just a few pies and decimal points in terms of change. Red stocks, Power Grid 0.7 down. Indiabulls Housing 0.7 down. It was the big gainer yesterday, so just some probably money being taken off. Hero Moto, Gale, HCL Tech, Tech Mahindra. Well, there's a rupee strength, if you would have noticed. Now the dollar costs only 69, 66 thereabouts. That rupee strength is telling on the IT stocks, but actually I don't think you should run away with that because it's very common on December 31st for the rupee to become stronger. Yeah. There are some people who have to bring in their dollars before that date. So there is an unusually high flow for 31st December and therefore, as a consequence, 1st Jan as well. It need not be the shape of things to come. So just watch out. For today, you will see IT stocks a little in the red. But the mid-caps are softer than the large caps.
Well, yes, not much activity there at an index level. But a couple of pockets looking good. Aviation stocks are actually up and about. Remember, it's been the second consecutive massive cut in ATF prices. In Jan, ATF prices have been cut by almost 15%. They were cut by 11% in December. So a lot of relief coming in there. SpiceJet is up 2.5%. Interglobe, Jet Airways is doing well. Also, volumes picking up now on Jet Airways and Interglobe as well in the green. Apart from that, a couple of these banks, PSU banks, UCO Bank, Central Bank of India, OBC. I mean, it just could be a freak trade today. So don't put too much stock into it. But these are some stocks that are looking pretty good at this point in time. Apart from that, you have some of these capital
today.
Yeah,
they all got. I mean, the capital has been announced. That's all.
Okay, so there is a reason for that. But I mean, these are stocks that have not done anything all year.
No,
so
it was pre-announced.
Yeah,
it's just that the actual capital came.
The capital has come. All right, and a couple of these capital goods stocks also are doing okay. So names like BHEL, etc., are trading in the green. On the downside, though, you have PFC that's down about 1%. Some of these best performing stocks of the last month are coming off. Indiabulls Housing is down about 0.5%. As I said, this time in the auto names, commercial vehicle numbers could be weak. So Ashok Leyland ahead of that is down almost about 0.2%. But otherwise, it's a flat opening. Not too much activity today.
Yeah, 1,200 crores of volume in the first 3 minutes of trade. 9,000 crores in the futures market. It's telling you, really, the problem today in taking trades will be if there's no follow through, then you are stuck badly. And let's see. For now, it doesn't look like anything is moving. Just 5 points on the Nifty Bank, 2 points on the Nifty.
A 0.2% of the equity has exchanged hands. Is the Suti doing something?
No.
I mean, it's a large deal.
No, I think...
No, I'm no inside info. I'm just guessing.
Yes. No, I don't think it would be that. Even in Bharti, there's a big block deal, actually. That happened in pre-market. Okay. So that stock is also quite interesting. But really, nothing kind of market. Ashwani, what do you do in a market like this? Perhaps get into Netflix or something? Or is there a trade here?
See, last 2 days have been fairly narrow range days. So watch out for the two boundaries on up and downside, and maybe by afternoon you'll get a better sense. But for the moment, I don't think there is much to do on the index.
Okay. No stocks, Ashwini?
See, stocks also hardly 1%, 0.5% type moves are there. So, you know, what you can do is probably have positions which have validity more than a day. So that way, you know, whatever you do, plan to hold on to it.
Okay, Sudarshan, your thoughts?
Well, stay long in the indices and do nothing else. I mean, don't buy or sell, just stay with your positions. IGL is giving signs of life, and that's coming out of a correction also. So that's a buying opportunity. And so is Dr. Reddy's. I talked about Sun Pharma. You can add Dr. Reddy's to it.
Actually, why aren't any of you talking about HCC? I know it's a penny stock, but this is the third or the fourth day running that it's climbing up. Today, it's decent volumes. In the first 5 minutes of trade, it's what, 50 lakh traded in just one exchange. Mitesh, not a stock you bother?
Actually, I would. You know, I actually had a look at it yesterday because the price volume action was very strong. Yesterday, it opened at about 10.60 and then closed at about 13. So it's on the radar. It's managed to get past the 1350, 1370 zone. I think it's just trading about that. But overall, it does look like some kind of breakout has taken place over here. And my sense is that we are possibly heading towards levels of around 17 on this. So I think it's a good stock if somebody wants to buy and, you know, hold it for about about 2.5 months. But I would also recommend a stop loss just below 12.5 and look for targets of around 16.5 to about 17 on the upside.
Okay, Prakash, you want to make a point on HCC?
No, I'm not surprised that Lata has noticed this uptick in volumes, and yesterday it was up 20%. Yes. There were a couple of bulk deals also which happened. And on Thursday, Surbi and Sonia, we were on the closing bell, we were talking about infra stocks like NCC and HCC. Sorry for the alliteration, but you know, those were looking very promising. And at that point in time, noticed you know, they've inaugurated one of the largest railroad bridges in the country in Assam, which connects it to Arunachal, and this is in a place called Bogibeel. So, the Prime Minister actually inaugurated it early last week, and they've also concluded a rights issue very successfully. And if you look at the book value, it's upwards of $22. And the stock is at 13 or 11 or whatever it was. So what it tells you is that if there's some restoration that's on the cards, here's a guy who will actually be benefiting tremendously from that. If he's completing projects in time, and significantly large projects, and the rights issue's got money, there's something definitely positive about the stock that the market is probably waiting to discover.
All right, okay, that's HCC, but you know what? So much wealth destruction has happened.
Oh yeah, this could flatter to deceive so easily.
Yes, exactly.
I see Prakash is betting a lot on beaten down stocks this year, right? Is that a theme that you're looking at? I mean, Balaji, HCC, and...
No, this was anecdotal. The HCC story is this thing. But yeah, there could be some upside.
Right. Okay, Prakash, thanks a lot for joining us. And of course, have a great new year. To our technical experts as well, thanks a lot for joining us, and of course we'll keep coming back to you. For now, we have Samir Arora, founder and the fund manager of Helios Capital, now joining us from Singapore. Samir, good morning.
Good morning.
You have a day off, of course, in Singapore, for the entire world actually, except India. So, a bit jealous of you right now. What's the new resolution?
Well, I was just saying, this is my job is India related. I don't really have an off till Indian market is closed. But Happy New Year to everybody. You and Lata.
But you don't trade daily, so Samir, that's okay, I guess, for you. But anyway, what's your New Year resolution?
Well, you know, I have figured out finally how to lose weight. I haven't implemented it yet. So I'm going to now implement what I have learned, and maybe in a few months we'll discuss.
Okay, when you get that formula, please send it to me as well, Samir.
But for someone who's sitting at...
Well, I accept it.
Yeah. Samir, for whoever's sitting at home, you have an off. So you can't complain. Only if we find you sitting in your office, that means you're at work.
So that I agree, because after this, you know, after this, I'm going to go back to my T-shirt and shorts and go back to Netflix binging or whatever, or maybe this Amazon Prime. But there are good stuff going on everywhere.
Okay, I know. It's about time some party, as I was telling Anuj, it should be in the party manifesto that we elect you only if you declare Jan 1st holiday. I mean, this is getting ridiculous.
How we came up with this, nobody knows. But it's been around forever. This
not ever,
Jan.
not ever. When I started reporting, 1995, we got the whole week off, you know. There was no NSE at that time, the bloody killjoy. We had, December 25th to Jan 1st was a holiday. The next year, 96, NSE had come. Then it was whittled down to 3 days, but still 3 days holidays. And after that, it went off. It went off in 97 or 98. I had 2 weeks, 2 years when I had a holiday in the last week. You don't remember that?
Maybe I was around that time, but I don't remember. But anyway, it's quite bad. I agree.
Right. What about, now, we are going to remain disgruntled about this for very long. So let's move on, Sameer. How are you feeling about the markets in 2019? Are you feeling much better than you were in 2018?
Well, actually, in the end, 2018 hasn't turned out to be so bad. First is, that what ends well is good, and, all well that ends well in the sense that in the last 2 months, because the markets improved and because the currency improved, and you could associate it with some fundamental change, whether it's oil or whatever, that going in looks better. But even 2018, at the end of it, although it was very bad up to September, in the end, it's sort of okay. And considering that these times came after a few good years, it was okay. But in 2019, I think it can't be a runaway year, I think, initially. But it's going to be a positively trending year, and then we see what happens in May. But it won't be a year where you are, you have to be bearish from day one. We are going in bullish, but we know that you can't have a runaway rally, I think, till these things get sorted out in terms of election outcomes and all. And after that, you could actually have a very good year if the rest of the world doesn't fall apart.
Oh, there you are. Well, actually, I was wondering why should it not be a good year? We've seen some kind of a private capex sticking. We're seeing better order books in many of the capital goods. And we've seen banks cleaned up. Yesterday, the Austria Reserve Bank itself said that NPAs have peaked off, and they are forecasting in their base case and their stress case scenarios lower NPAs in the coming quarters for the banking sector as a whole, and even for the public sector banks. NBFCs are not there, so there is a field day for the banks. All this should add up to better growth numbers, right? Better earnings.
Yeah, I agree. I think first is that the fact that currency stops depreciating is such a big deal for foreign investors. And now it looks at plus minus, even if it goes back a little bit, but broadly it is stabilized. And that itself takes away many of the hesitation that foreign investors may have. In terms of fundamentals, clearly all these things add up. Oil down and currency stable, and GST and all those things having taken more time. And so all that is good. The only thing is that still there is an event, and that event is associated with very high volatility in the past, and even now could be. And second is anything that the government may do which may be viewed by the market as being overly friendly to, which it should be sometimes, to rural or to farmers, or something which looks a bit affecting fiscal deficit and things like that. But broadly, I think it's a good year, but I don't think it can be a very big year till we have crossed the event. After that, I think it doesn't matter who wins or loses beyond a point. But I don't think you will celebrate so much before.
Yeah. By the way, IGL, the stock that Sudarshan spotted, is seeing some massive buying, and it's in terms of open interest build-up, the price volume action. Just pull out that stocks chart intraday. Not too many stocks are moving, but the move on IGL is very interesting, and it's backed by very strong volumes, higher than the average volumes on IGL. So that's something that you may want to just keep on your radar. Sameer, I completely take your point. In fact, October to December perhaps has been one of the good phases for the market. The market actually reacting, well on the bad news as well. The market breadth has been strong over the last 2 months. And we have seen some rotation from exporters into domestic stocks, cyclicals. You think that could be the theme as we move forward?
Well, in a sense, the fact that exporters, which basically, let's take that as tech, not as much as pharma, I don't see a play for tech. I mean, it makes no sense to be going in after, in theory, a correction or a consolidation and then buying stocks that are up 30, 40, 50%. And if you look at the earnings growth of those companies, they are in the 10, 12% type number, at least for the large IT companies, which are up 30 to 50%. The numbers for 2020 over 19 would be maybe 12% for Infosys and maybe 14, 15 or maybe 16% for TCS, which if the markets were stable is nothing to write home about after they've had this currency benefit and whatever else, global benefit and US benefit. So I would agree with that. My only thing is what Lata was saying about capital goods and, a revival of capex. I don't think that is so straightforward for two reasons. One is that the government, if it has to make a choice, would rather give direct money or spend it more visibly in the short term than to say that we are going to set up new projects which will take 3 years to implement, because right now time is running out for them in terms of elections. And the second is, which is what we felt independent of these politics things, is that actually we are having capex in a different way, which is companies are buying distressed companies, right? The cash rich or whoever is coming in is buying through the bankruptcy process or whatever companies. So if that process has to work well, that is that companies are being sold and people who have defaulted are losing their companies, then money will go into buying those assets, which is not effectively new capex per se, but is making the old capex more productive. The capex which was stuck because it was 80% done or 90% done or was fully done but did not have financial wherewithal to run the company. So that is, both can't be done simultaneously in a big picture, big projects. Either the bankruptcy process will work well and you will buy those projects, or you will set up your own. But of course, some greenfield here or there or brownfield with some consumer type guys expanding capacity here and there, that can always happen. But I don't think big picture, big capex can happen right now. The overhang has to...
Samir, I'm so glad you said that, because it had become such a crowded trade, such a crowded view over the last 2 months that the capex cycle recovery is intact. So I mean, I'm glad to see that non-consensus view there. But how do you approach? I want to also ask you about consumption and consumer durables. Well, I'll come to that in a bit. Before that, how do you approach this market from a retail investor standpoint? Because there's one view that after the kind of losses that you've seen in 2018, perhaps the best way to approach 2019, at least until elections, is to stay in safe, quality, large cap market leaders. But the other view is, which we just heard from a guest a while back, is buy into some of the beaten down names, the infrastructure stocks, the stocks that you've gotten cheap. How are you approaching it?
But just before that, we should highlight to the world, I am not an Indian mutual fund manager, but I don't think the losses have been very steep, other than people buying small caps on their own account. I look at all the fund NAVs, and they are down, maybe some of them are up, but broadly, maybe they are down 5, 7, 10%. I don't think very few are down 20% plus, which would look like some scary number. So if somebody has lost 5, 7, 10% this year in rupee terms, I don't think it's such a big deal that it should be viewed as changing somebody's strategy or their confidence being shaken after what happened in 17, where they would have all made 40, 50, 60% maybe. So first of all, there is no question that in big picture, equity markets do well, and the first thing somebody should do is not walk away from the market. You may walk away from a stock or not. In terms of buying beaten up names, I feel, it always happens that many of the stocks that get beaten up, you feel that they've deserved it and maybe we didn't realize it then. So for us, it is a mix and match like it should be for everybody. You may buy 1 or 2 beaten up names, but that is not a strategy. That is diversification of different styles. Some companies you will be more confident because they are doing well, and some you may buy because they are beaten up, but neither of them separately can be a strategy. It is a mix of buying 40, 35 names with slightly different motivations behind them. And that is how you can outperform over time, because you never really know which phase will come when.
One more liquidity question before I come to specific sectors, Samir. We just had an economist telling us that while there will be slowdown in the US, the developed markets, especially US, could still be the preferred destination for smart money, and EMs will wobble because of the global slowdown. Would India be an outlier, because now domestic money has quite effectively grown as a force to reckon with?
Correct. Actually, my positive story for India is that in 2018, the foreigners were selling and the domestics were buying. And the reason why foreigners were selling, one part we don't know, but one part was that the currency was depreciating every day and irritating everybody. Once the currency stabilizes, which it seems to have, the foreign investor is much, at least people like us, and I think they're all similar in that big picture thing, is that we are able to buy stocks which we like. We just don't want an overall, like a stone pulling down, into the sea of water. So if currency stops, you can sell a story to your investor, foreign investor, that there's not much to lose whether the gain takes time or not. And my dream scenario is what happened in 17 and many other years before, that both are buyers. I think there's a logical case for that both foreigners and domestics are buyer, and then the market really goes up, and then of course IPOs and divestments or whatever happen to try and match the demand. But that is the scenario we are.
Okay. Buy what, Samir? Buy what, Samir, in 2019? Give us a New Year's gift. In terms of
the problem is that I have been giving gift for 20 years, but you guys want new gift. There is no need for
No. Even if you regurgitate the old gift, I'm ready to take it.
It's the old gift is private sector banks, the same 2-3 banks. You see, even last year they did well. I'm sure last year in January, on 1st January, we would have discussed that. And generally, every time I say the same, there is no reason to say that I want something completely new. The reason why we don't normally say a completely new name, because as I've been saying forever, we buy 30, 35 names. The smaller names are 2%. Sometimes they disappear from the face of the earth and it doesn't matter to me. But 3 out of 4 times they go up, and therefore the overall portfolio returns are good. But the point is, any one name, if you highlight, it could be the one which blows up and makes everybody more upset than we deserve. So in general, the point is that in India and even in the world, if you see, the themes that have worked well in a big picture, long-term sense, and which is not being shaken right now in India at least, is financials and consumer. The other, the infrastructure, and maybe tech, pharma, or that kind also, at least the US textile. But in India, if you say I'll buy infrastructure, sometimes I'll buy commodities, sometimes I'll buy this, that, we also do. Okay. But you never have full heart behind it, and you're doing it because you want to cover yourself. But you really don't have so much this thing that the stock has been beaten up. Half these stocks that have been beaten up have disappeared from the face of the earth.
Absolutely.
Yeah, okay.
It's difficult.
Sure.
There's no need.
Samir, one sector which has consistently underperformed is autos. Even the big leaders like Maruti, Ashok Leyland has really seen a massive decline. Tata Motors, of course, we all know what's happened to that stock. It's been in a bear market of its own. There are not too many auto stocks which have done well. What do you think is going wrong here? And are there opportunities?
No, first of all, they're different stories. So like Maruti we own, and we've owned it for many years, and we still own it, and we think it's okay. The others are, Tata Motors hasn't done badly because of India. It has done badly because that business is a capital guzzler, and it's not even easy to analyze it. So these are different stories. We would own the consumer type names in the sense that these are dominant company, and over time this growth can't disappear. In between, maybe there was higher growth because of these car consolidators, Uber and Ola type guys. And maybe that made it a little higher than normal. And over long term, it may reduce the car demand by 1 or 2% here or there. Because in theory, if this becomes very convenient, then people may not want a second car or a first car or whatever. But big picture, we like it, and it has corrected on 20%, and it's okay. It's again, as I said, a portfolio stock. It may not be if you have to buy only one stock, but it's a good stock. But we don't buy Ashok Leyland stroke Tata Motor, and some of them we short sometimes.
Okay, and finally, since we don't have much time, let me try and squeeze in a question on the consumer durable stocks, because the consensus view now is that consumption will take a back seat and capex will see a pickup. Would you buy that view?
From a stock market point of view.
From a stock market point of view.
Because consumer is doing consumption and the corporate is doing capex. You mean from a stock market point of view?
Yeah.
The thing is, after that, if you look all these guys who say that we believe in capex, what are the stocks they recommend? I already have them. They will say buy ICICI Bank, or they'll say buy maybe Axis Bank, because they'll say it is corporate and it will finance capex, or they'll say buy L&T.
Yeah.
These are all the Maruti equivalent or the TCS equivalent of these businesses. and we like them all. But when we say capex, we mean, will you buy a beaten up name which has got no order? Will you buy a Bhel? Will you buy somebody? I will not buy. Yeah. So it depends on what you mean by capex. If you mean, in a direct, indirect way, it is capex, it's okay.
All right.
But I don't feel like betting on these exotic things. It is better to bet on exotic financials, which we totally relate to and understand, or even consumer, where even, in bad times, those stocks, like if you buy an MNC consumer, some of them are very high PE, but some of them have corrected also this year 20-30%. And basically with the slightest shift in a few numbers, they go up. If you look at their history, and at least you can project 5-10 years of growth, or maybe 20 years of growth with seasonal or other issues coming in, and so those are easier for us to buy, so that we can talk more to you on CNBC. Okay. All the guys who don't come on your channel are the guys who do over analysis, and then therefore they must be telling you we have no time to talk, whereas I am always available because I do simple and easy.
Samir Arora, you're always welcome. It's a pleasure speaking with you. You light up what would have otherwise been a dreary day. Thank you so much. Have a great 2019 yet again, and keep coming on our channel. Okay, so well, that's a nice start to the new year, at least a fun start. Well, with that, we get serious again. We have to look at the NBFC's issue, because that would be another tail part of that problem which could play out. They saw a liquidity crunch in the last quarter, got easy after some time, but that opened up some space for small finance banks. There has also been some market share migration from the smaller NBFCs to the relatively larger NBFCs and small finance banks. To discuss this, we have with us Samit Ghosh, Managing Director and CEO of Ujjivan Small Finance Bank. Mr. Ghosh, good morning. A very happy 2019 to you from all of us.
Good morning. Happy New Year.
Thank you, sir. Well,
Happy New Year to you.
Okay. Well, first, let's start with this positive that carry over from 2018. Have you seen a migration of business from NBFCs to banks like yours?
Well, obviously, there are a lot of small microfinance institutions which are, still have a liquidity issue. And we've seen opportunities in that. But more importantly, I think number of us, are actually lending to a lot of the microfinance institutions, because they frankly don't have a asset liability mismatch, etc. In fact, in December, we did about 100 crores of loans to various NBFCs, ranging from microfinance institutions, auto finance, school finance, etc. So we are also supporting them during this period.
Okay. Mr. Ghosh, good morning. Any kind of market share gains at all, or would it be like too early to quantify that?
Yeah, I think it will be too early, to quantify market share. I think you'll have to wait till the year end.
Okay, all right.
Yeah, but I think overall SFBs have done very well. We have, as of September, 3,200 branches, and over 2 crores of customers we serve. We have 61,000 crores of assets, 40,000 crores in deposits. So, I think SFBs have done very well. They've got off the starting block and been able to build the business remarkably, I think. I think SFBs are a success story, actually.
Good to hear that, because payment banks, I don't think are. This is a good one from the regulator. But Mr. Ghosh, can you give us the numbers in terms of percentage growth? For instance, how much may disbursements have grown in the third quarter? How much may the number of customers have grown in the third quarter? And as well, total AUM.
So, in the third and fourth quarter, we expect significant growth, and third quarter has been very good. In the asset business itself, I think our growth is around 25%, and deposits are also growing. And it's a similar story for our, customer growth, because we are not only growing our microfinance customers, but we are also growing our deposit customers. So that it's a very positive third quarter for us, and we expect that to continue in the fourth quarter.
I wanted to talk a little bit about the MSME segment because, you know, in the financial stability report that the RBI released, they did warn against a very high MSME loan growth and dilution of credit standards as well. From your end, have you been able to control the asset quality in the MSME portfolio?
So, yeah, we spoke last time also. We've actually moved a lot of our MSME business to secured, you know. Earlier, we used to do a fair amount of unsecured business, and there we saw some portfolio quality issues. And then now we have actually, for the last 1 year, we started moving more and more towards the secured business, and there we are doing fine.
Okay. Do you notice any ebbing of their problems? I mean, they were thrown into a tizzy after demonetization, a little bit in GST as well. Has that settled, or are you still seeing that hole not getting, not recovering?
So, Lata, you know, I mean, demonetization is totally behind us, and we don't have an issue, and we've actually focused on building the business this year. So that is not an issue, but I think now with there are a few things which are sort of concern, you know, which have been difficult developments. One is, you know, with intense political competition now coming up after the midterm elections, there is, you know, this whole loan waiver mantra has, you know, escalated to a different level. So we are concerned a little bit about it, and I think historically we've never faced this problem because most of our loans are not in the farm loan category. But we can, you know, there is concern that there can be collateral damage. You know,
you mean
because
consumers?
Everyone is shouting.
Yeah, exactly. So do consumers confuse? Your borrowers confused that theirs is not a crop loan, and the Madhya Pradesh government or whoever, for instance, have only cancelled or waived farm loans of public sector banks. Is that message confusing and people are refusing to pay up?
So, you know, there is some confusion today, I mean, in some states like Madhya Pradesh, etc. But I think MFIN, which is slated to meet with the Chief Minister, Mr. Kamalnath, you know, and resolve these issues. But this is only in pockets. I think even in Maharashtra, some of the political parties which created the issue during demonetization are also raising these issues. But it's limited to very few states. It's not across the country.
Okay. I just want to ask you a final question on cost to income. You know, it's pretty high. I think when we last spoke, it was 76%, Mr. Ghosh. I mean, you told us that setting up new branches always means higher expenses. It's not so high for Bandhan. They seem to have cracked it. You know, their cost to income remains sub 50. Do you see yours falling?
Right. You know, I think Bandhan, of course, invested a lot in opening branches. If you remember, they opened 800 branches before when they started. And they actually got a huge benefit from the demonetization because from that demonetization, their deposit growth was enormous, you know. So that was a bonanza for them. And our, you know, we've now opened 467 branches and now, you know, this year, and we hope to cross 500 this year. So it will come down. It will come down because you will start seeing, because our asset, our asset book is scaling up, deposit book is scaling up. So that will lead to, you know, much more respectable cost to income ratio. So this year is an investment year for us also. So I think the market has to bear with it.
Okay, I just had one last question. You did speak about your concern with respect to the possibility of the farm loan waivers and, you know, the quantum, etc. But what exactly is the issue? Because when we've spoken to a lot of the industry people, a lot of the analysts in the past, they've said that small finance banks, urban MFIs, etc., are not, the farm loan waivers don't affect their customers a lot. So what would be the primary concern for you?
No, that's true. That's true. In fact, small finance bank and most microfinance institutions have not been impacted in the past. and they're not likely to be impacted this time also. But, you know, there's always collateral damage, you know. As we were speaking earlier, if there's a farm loan waiver, then people think all loans should be waived, and some of the political parties are making an issue also.
Yeah.
So that is a little concern, you know. There is a possibility that there might be some collateral damage for us, and in fact, I think people who have a rural portfolio bias need to be much more concerned, but this is strictly in pockets, you know, and I hope the rhetoric sort of comes down, you know, on this issue.
Fair point, sir. Thank you very much, Mr. Ghosh, for joining us. And once again, have a great 2019, all of you at Ujjivan.